Warm welcome to CA Raja classes and thank you so much for joining this mini and micro webinar. Before we get into the discussion, let me just take a couple of minutes to introduce myself. I am CA N Raja, a chartered accountant by qualification, a teacher and trainer by passion, and teacher for 3 lakh plus students worldwide. I started my career as a banker with State Bank of India. Then after a period of 4 years, I got into CA practice. I had my practice for 7.5 years. But I realized my calling is teaching. I started focusing on teaching and training, and today, with the blessings of God, we have 3 lakh plus students worldwide. So now it's time for us to get into the session.
Friends, in this session we'll be understanding what is CMA. In banking, CMA is called as Credit Monitoring Arrangement. This is nothing but an Excel sheet which will give information about the past of the customer in financial data, which is basically lifted from audited financial statements, and it will also give picture about future, that is what is they are having as estimate for immediate future, say that's next year, and what they have as a long-term plans for their term loan tenors, which are called as projections. So CMA is basically an Excel document which will tell to the bank about the financial performance of the customer in the past and what he is planning for the future. So the CMA will have 3 input sheets. The first sheet is called as operating statement, which is nothing but transferring all the data from the profit and loss statement of the customer. The second statement is called as liability statement, and the third statement is called the asset statement, and details for all these will be lifted from the balance sheet. We'll see how a typical CMA will look like. This is how a typical CMA will look like. This sheet is called as operating statement here. So note here OPSMT. This sheet is called as operating statement. This sheet will capture information for the past years as well as for the future, all related to income and expenses of the business. So this sheet basically captures the information from profit and loss statement of the customer as far as the auditor is concerned, and as far as the future is concerned, it is dependent upon the data that is furnished by the customer. So it starts with gross sales, and it talks about various expenses from this point, expenses like raw material, other spares, power and fuel, direct labor, other manufacturing expenses, depreciation, then stock movement, selling and general expenses, interest expenses, then operating, non-operating incomes. Then finally it talks about the profits and the tax component, and what is paid as dividend and what is a retained profit. We will understand all this concept one by one in the subsequent sessions, but this is how a typical CMA will look like, which is basically an Excel document. So this is the first input sheet. The second input sheet is the liability statement, where you will be giving all the information about the liabilities. The audited is picked up from audited financial statements. So here there is a mention audited. Audited is picked up from audited financial statements, and all these estimates and projections are something given by the customer, what he is planning for the future. So the liability statement will classify the liabilities into current liabilities, then all current liabilities will be listed, then term liabilities, that is those liabilities which are payable after 1 year, then it will break the other portion into net worth. This is nothing but the owner's contribution, which are in the form of capital, in the form of reserves, etc. So total liabilities will be captured in this statement, and next statement is asset statement, wherein all the assets which are available with the company and listed in audited balance sheet will be shown here under the audited column, and whatever they are planning for future, whatever the asset creation, that would come under estimates and projection. So the assets are divided into current assets. You have the total here, current assets, and current assets will have various classifications, then fixed assets, and there is something called other non-current assets, and the last element is intangible items or intangible assets. We'll be understanding each and every concept in the subsequent sessions. So I have shown you how a typical CMA will look like. So out of these various sheets, only these 3 sheets are input sheet. So if we feed data into these three sheets, there will be outputs in many other sheets that also let us focus. So by now you would have understood that in CMA, input have to be given from two statements. One is the operating statement and the other one is balance sheet. Balance sheet means basically the asset statement and liability statement. But if this input is given, then that CMA would give various outputs. What are the outputs? The first output would be a sheet called financial ratios. Financial ratios or financial indicators is the output sheet. So if all the data are entered in operating statement and balance sheet, this statement will be prepared automatically. This sheet will come automatically, which will talk about various financial indicators. So it starts with operating profit, then profit before tax, profitability, cash accrual, paid up capital, T&W, adjusted T&W, like that. It starts and goes on with many ratios, and the ratios goes to other ratios, efficiency ratios, then risk rating related ratios, and it keeps going on. So once you feed the data in those three sheets, you are going to get this sheet, and which is one of the important sheet in banking, because this is going to talk about all the wellness and bad things of the customer in terms of ratios. The second output what you would get would be the holding level sheet. This sheet basically talks about the levels of current assets and current liabilities maintained by the customers. So this is the holding level sheet. You will have it as WCC, that is working capital holding level sheet. Here this sheet would tell how many months of raw material stock has been maintained, how many days the funds are locked in stock in process, how many days of finished goods are maintained, similarly how many days of credit is given to the customer, then how many days of credit the customer enjoys from his supplier. All this detail will be available in this sheet. Then the next output would be the ABF statement. ABF is nothing but assessed bank finance. So this statement could tell the bank what could be the possible borrowing requirement for the customer for working capital. So this statement is called as the ABF statement. This statement would take the information from the balance sheet, and finally it would do some various calculation and would tell the bank what could be the assessed bank finance. So what is the eligible working capital finance for this particular customer. So this sheet is very important because it is going to tell how the company has financed its current assets, what are the combination, how much is from net working capital, how much is from bank finance, how much is from sundry creditors, how much is from other current liabilities. And it is also going to talk about certain critical number of days, which is very important in understanding the working capital management of the customer. So this sheet talks about all those, that is ABF assessment. The next output what you would get is fund flow statement. So what is fund flow statement? This statement basically extracts the data from balance sheet and P&L and will classify the funds used in the business and mobilized in the business into two types. One is long term and short term, and it would give very critical information to the banker how much of the funds have been mobilized from long term sources and used for long term purposes, short term sources and used for short term purposes, and crisscross how much of short term is used for long term and long term is used for short term. So this would be the statement FFL, that is fund flow statement. This statement would list out all the sources, all the source of funds, and when we say sources, all long term sources, and it will also list all the uses. I mean, what are the long term uses? Sources and uses will be shown separately. Then at end of it, it would give what is the surplus or deficit out of all these sources. So there were some long term sources, there were some uses. So after usage there should be some surplus, or it can also be deficit. If there is surplus, how the surplus was used for further activities, or if there is deficit, how the deficit was managed. That's what I explained in the subsequent lines. All this we'll understand in a separate session. So in CMA we have to give input that is basically for past as well as for future. But when you give input for the past 3 years audited financials, you are facilitating, number one, to understand what is the trend of the company, how the company has moved in the past 3 years, and you can also get what could be the average performance of the company, and you will also get to know what is the latest year or immediate past performance of the company. Now let us list out the items in CMA one by one to gain some understanding. See, the first item is operating statement, so we list only the operating statement items. To start with, we have to give past 3 years information, number one. Number two, we have to give estimate and projection. So any CMA, it should have past 3 years, number one. Number two, it should give estimate for the current year and what you are going to plan for the projections, that's for the future year. So whatever the items we are going to discuss, that should be given for all these years. First is gross sales should be given, and from gross sales excise duty should be deducted and net sales should be shown separately. So this is basically the income. And on the expenses, to start with, the first expense should be raw material consumed, and that should be broken into indigenous and imported. This information is important because they have to understand how much is sourced locally, how much is sourced from outside country, because when it becomes an outside country purchase, obviously it would require something called letter of credit. For that purpose, this breakup is required. Number two, what are the stores and spares that have been consumed, and that should be broken into indigenous and imported. Then what is the expense incurred by the company on its laborers? So the direct labor cost should be shown here. Here the focus is on direct labor cost. We'll understand that in subsequent session. Then the power and fuel cost should be shown. After this, we have to show the other manufacturing expenses and depreciation. So with this, the total cost would be shown, and with this, opening stock in progress should be added and closing stock in progress should be deducted, and that would give the total cost of production. And with this, we have to add opening stock of finished goods and deduct closing stock of finished goods. That would give total cost of sales. And with this, selling and general admin expenses should be added, and this would give the overall operating cost for the company. And if this operating cost is deducted from net sales, it would give operating profit. And from this only we'll deduct interest cost, which should be broken into working capital cost and term loan cost. Then we have to add the non-operating incomes and deduct non-operating expenses so that we get profit before tax. From this, we have to deduct income tax, which is again broken into current tax and deferred tax. And deferred tax liability only the banks would consider. Then we get profit after tax, and from this profit after tax only the dividend will be paid. The first one will be preference dividend and the second one would be equity dividend. And if any profit is remaining after that, then that profit will be transferred to reserves and surplus. In the subsequent session, we will understand each and every item of the operating statement in detail.
Thank you for watching this webinar. I am sure you have derived value from this webinar. And if you wish to learn more, I have some good opportunity for you. What is that? Check out.
It is this Credit and Financial Analysis Mastery course, exclusively designed for bankers and for those who want to have bankers' point of view. This is a course which we have developed after a detailed analysis, a thorough discussion with several hundreds of bankers and finance professionals. We have identified what is their exact requirement when it comes to SME and corporate credit and financial analysis. In this mastery bundle, I'm going to give you access to various courses. To start with, we have course number 1, Basics of Credit Analysis. In this course, we have explained the basics of credit analysis through various sections, section 1 to 9. Next comes course number 2, that is how to read balance sheet. In this course, we have explained what is balance sheet, how to read them, how to approach them by using real life financial statements. Then comes course number 3, how to do financial ratio analysis like a banker. In this course, we have explained all critical ratios that are analyzed by the bankers, and we have also explained through case studies. Then we have course number 4, how to do cash flow analysis. So through this course you will understand what is cash flow analysis, how to do a typical cash flow analysis. We have used case studies, and reference to Ind AS is also included in this course. Then we have course number 5, that is how to do fund flow analysis. This is a critical financial analysis tool, and in this course you will learn what is fund flow statement, how to analyze them from banker's angle, how to prepare fund flow statement from academic angle as well. So overall 5 courses, each 1499. So aggregate price should be 7495, but you are not going to pay that. For you it's just rupees 2499 for 1 year access, or rupees 4999 for lifetime access. And it is not yet over, you have some more bonus. Bonus is course number 6, how to carry out credit risk rating for non-trading entities. These are all the topics covered in this course. Then course number 7, it is how to carry out credit risk rating for trading entities. Not yet over. You also have access to course number 8, that is how to prepare CMA report for bank loans. It's a comprehensive course which will run for 8 plus 5 hours, and you will learn entire CMA report preparation process. And course number 9, how to prepare cash budget for bank loans. Course number 10, how to assess fund-based working capital. So in this course you will understand what is working capital, what are working capital credit facilities, and how to assess them, what are the key ratios that are related to working capital, and what are the additional key analysis that will be done by bankers on working capital matters. You will get a comprehensive understanding of cash credit, export finance, and there are certain on-demand videos as well. So 5 plus 5, 10 courses of value close to 15,000 rupees, but you are going to get it for 1 year access rupees 2499, lifetime access rupees 4999. Not yet over. You are going to get access to the 11th course, how to assess non-fund based credit facility. So in this course you will learn about letter of credit, bank guarantee, its assessment as well. Then comes course number 12, how to do term loan appraisal and assessment, because it's a complex process with a lot many technicalities. So this course covers all in detail. And course number 13, basic elements of loan proposal. So how a typical loan proposal will be, what are the basic elements that are covered in this course. And we have course number 14, case study on credit analysis. Various case studies based on practical experience and discussion with various bankers and finance professionals are included in this course. And course number 15, this is about collateral securities, where you get knowledge about collateral securities. So overall it's 15 courses of value close to 22,485. It's 1,000 plus lectures. You can subscribe for 1 year access or lifetime access as you wish. These are all pre-recorded courses, so you can access them anytime as per your convenience. You can access them in mobile app or desktop, and for you the price is not 22,485, it is rather 2,499 for 1 year access or 4,999 for lifetime access. You can check the link in description, where without using any discount coupon code you can enroll at this discounted price, because it's a discount applied link. And not yet over, you're also eligible for some more bonus. The bonus is access to various ebooks and e-resources. You are going to get access to various financial ratios ebooks, financial management related ebooks. You will get access to financial analysis related ebooks, credit analysis ebooks. Not yet over, you will also get access to other resources like test series, templates, audiobooks, video books, career guidance material, and a bonus resource. Check the link in description and enroll now.